Good afternoon, everybody, and welcome to our EGM Securities update. We've got Gaurav in Dubai with us today. Gaurav's going to give us some analysis. Gaurav, that GDP print was a topped forecast, but then I saw a number of interpretations. Some people were talking about pre-tariff inventory build-up, and then others were talking about a big consumer spending print, saying it was consumer spending was at a 2014 high. How did you read it? Because what I did notice is the dollar was strong, then we saw the dollar sell off a little bit, but that was a Friday, wasn't it? What were your takeaways from that?
It was a mixed session on Friday, Ali Khan, and that's because of that mixed GDP print reading that you alluded to. So when we had the release, it showed that overall US GDP came in stronger than expected at 3.5%, but more crucially, that PCE GDP deflator number came in much weaker than expected at 1.6%, well below the expected 2.0%. Now I just want to share with some of our viewers the difference between the overall GDP, the PCE deflator index, and overall consumer price index reports. These are important, and I want to preface because these basically form the mandate for future Fed policy. So again, anytime we see a higher price reading in the PCE figure or the CPI number, this urges the Fed to look at hiking interest rates. When there's less price pressure, then of course interest rates would naturally remain lower. So this PCE report, figure is very, very important. Let's start with the difference between the PCE and the CPI. So the CPI, which is the Consumer Price Index, it measures the total value of the change in prices of imported goods and locally domestically produced US goods. While the PCE Deflator Index, which came in weaker on Friday, measures only the consumer goods and services that are produced within the US. So let's take an example. For example, Toyota, the Land Cruisers or the Toyota Corollas, which are manufactured in Japan and imported into the US, are measured in the CPI reading, whereas they're not measured in the PCE deflator reading. Another example, for example, Boeing, established in the US, any of those aircrafts that are produced in the US and exported for consumption in the Gulf or in Africa or in Europe, those are not included in the CPI reading, but they're included in the PCE reading. So it's important because it is a very important gauge for inflation, and this figure came in lower than expected. I would tell our viewers today to continue watching this release. We have some more personal income, personal spending, and some more PCE figures releasing at 12:30 GMT today. So again, Ali Khan, the tip for our viewers is that watch out for those numbers. Anything better than expected should see dollar buying coming into play. And of course, on the flip side, anything weaker than expected should see weakness coming into the US dollar index. Overall, for today and tomorrow, I'm expecting the dollar index to trade between 96.40 and 96.80 levels. This, of course, is valid through Tuesday's trading session.
And Gaurav, just to come back to you on a couple of points. So that's a very interesting distinction. Thanks for educating all of us about that differential. But what you're telling me is that US companies are not able to push through price increases, whereas probably we're seeing price increases coming through because of the tariffs. Because, your Land Cruiser, your Toyotas, those are being hit by tariffs, are they not? Is that the distinction we should take away?
Yes, that's a very, very astute observation, Ali Khan. The fall in the PCE deflator index could be as a result of the ongoing tariffs that are being imposed by the US government, but they also have a big part to do with the adjustment of seasonal foods and overall energy prices. So remember that PCE deflator figure does include for price volatility in energy products, and it also includes for volatility in seasonal foods. So today's release due out at 12:30 strips that figure. It's the core PCE figure, which is less seasonal food and energy prices. So we're expecting to see a little bit of a more stable print, but again, if that number does come weaker, watch for selling to come into the US dollar.
And so you're expecting from your forecast, but you're still going for a stronger dollar over the next few sessions, it seems to me, overall.
Absolutely, Ali Khan. I have been a dollar bull for many months, many weeks and years. But what I would look at telling our investors to do is, I think there's some opportunities in the euro US dollar, particularly in today and tomorrow's trading session. The reason I say this is that we have a bunch of European data points due out tomorrow and Tuesday. Unfortunately, we don't get to speak on Tuesday, but do watch out for the Eurozone GDP print that's due out. I'm not expecting too many changes there. But overall, we have a lot of survey for business climate and investor sentiment also due out from the Eurozone. So this could see, depending on how those figures come out, could see a volatility in euro crosses. But overall, yes, I'm expecting to see a target of 1.13 in the euro against the US dollar. I'm expecting upside resistance to come in at 1.1380. Upside resistance coming in at 1.1420, with the downside move very likely towards 1.13. Also, I am watching very, very closely the performance of the British pound against the US dollar. The pound is in a very, very tight range in the past 2 or 3 days. We had a lot of selling pressure coming in at the end of last week. And overall, I'm watching for that level of 1.2780 in the GBP against the USD. So traders should watch a little bit of buying support coming in at 127.80. A clear break of this could expose levels towards 126 towards this week and probably next week.
You're looking for 126 on sterling over the next few weeks, did you say?
We saw a strong, we saw a pretty good test of that 127.80 level in Friday's trading session. Of course, because of the flip in the US data docket, the pound sellers were not able to break through this level. But again, yes, that 127.80 level is a very, very key level which I would tell our traders to watch out for. If we do see a break of this level and a daily close below this level of 127.80, this could expose 126 levels in the next 1 or 2 weeks.
And finally, Gaurav, can I possibly ask you to have a think and tell us what you're seeing in the equity markets? Because it's been a horrible October pretty much across the world. What do you feel? I mean, I was looking at the seasonality and thinking back to the days on the trading floor, and October has always been a notoriously difficult month. Do you think that this is the start of a major bear move, or do you think we've seen it? What is your thinking around the equity markets?
Ali Khan, I think what I would want to do is I would probably want to wait till after the November midterm elections to solidify a view through the end of 2018. What I'm seeing and what I'm hearing is that a lot of the big hedge funds, a lot of the big equity funds are reducing their positions to avoid being exposed to any volatility as a result of these midterm elections coming up. Again, there's a lot of uncertainty in Washington to which way this vote could possibly move. Will the Republicans and Trump go for a clean sweep? Do the Democrats have enough, particularly in the Senate and the lower house, to probably force a majority, which would then see kind of like a hung government situation in Washington, which I think would be terrible for equity markets. On the flip side, if we do see a Republican clean sweep, I would expect to see a bit of a correction towards the upside coming in US equity markets. So again, it all really depends on how these midterms pan out next week. That's on the 6th and 7th of November. I think we need to wait to see how that comes out before we can really gauge if we would see more downsides or we could see a bit of a reversal on the
So what I'm taking away, just to conclude, is that there's plenty of event risk. The US elections, you've got sterling Brexit talks, you've got Italy also swirling around in the euro. And that, what I'm taking away from you is you're telling traders stay alert to these news events because they could also drive the market sharply.
Absolutely, Ali Khan. You said it as best as I could. Traders that are trading with us should realize that in high events of excessive volatility and risk, do employ your stop losses, do employ your take profits, have a plan when you enter into the markets, and again, use your stop losses to a high degree, especially when it's so uncertain.
Always a pleasure, Gaurav. Thank you so much for giving us insights at the start of the week. We thoroughly appreciate it.
Great to speak to you, Ali Khan. Have a nice week.
Take care.